Did you know the average cost of retirement is $828,000 and the average adult over 60 will spend $46,000 annually? And the length of retirement is about 18 years. $46,000 times 18 is, you guessed it, $828,000. The good news is the sooner you save, the better. Buying stocks has the most potential for growth and can be low risk. First, I will explain why buying stocks has the most potential for long-term growth. Buying in stocks can earn compound interest and pay dividends, which is better than a savings account. Stocks is a shared ownership of a company. You could buy stocks through a broker, or you could buy stocks online through websites like TD Ameritrade, Fidelity, and E-Trade. What is compound interest and how do you earn it? Compound interest is generating more interest on an asset by reinvesting your earnings. Here's an example. You deposit $10,000 in a 5% savings for 3 years, which earns you $500 each year. Now, after those 3 years, you will have $11,500. Now, let's say you get that $5,000 and you reinvest it into your savings and make it $10,500. And over the next 3 years, your initial principal will equal up to $11,576. Compound interest is the most powerful tool in investing. You get paid dividends. Dividends is a sum of money paid annually or quarterly by a company to its shareholders out of its pockets. Most companies that are well established will pay dividends, such as Apple, Coca-Cola, and Microsoft. Buying stocks is even better than saving money for a rainy day. Saving money is a short-term goal. Unexpected events such as your car breaking down, unexpected trips to the hospital, or even overspending will make you pull out of your savings account. The mindset that plagues America is the more we make, the more we spend. Many Americans live beyond their means. Buying stocks is more beneficial than saving and is a long-term goal. Buying stocks has higher returns than savings and can go up in value. Stocks also have greater potential for profit and isn't easily accessible as a savings account. Having discussed the importance of investing over savings, I will now discuss how investing isn't gambling. Investing can be low risk if you buy stocks in the S&P 500 or NASDAQ and invest long term. The S&P 500 is the U.S. stock market that represents 500 of the largest companies. These companies are divided into sectors such as technology, services, and healthcare. Also, the S&P 500 diversifies your investments to mitigate losses. Warren Buffett, the most successful investor of our century, whose net worth is $81.9 billion, recommends investing into the S&P 500, which is cited by Forbes magazine at www.forbes.com/magazine. Being a long-term investor has better returns according to the Dow Industrial Average. The Dow is the entire stock market over the last 100 years, as stated by Dow Jones 100-year historical chart. Many companies started really small and sold their stocks little to nothing, and if their stocks were held today, would yield tremendous gains. An example of this is Amazon, whose stocks were $1.50 in 1993, and nowadays one stock of Amazon is worth $1,200. As you can see, long-term investing is the safest route, and finally, anyone can be an investor. No matter your age or how far you are from retirement, you want to enjoy your retirement without having to worry about money and do whatever you want. Today I discussed how to make money work for you and how to do it with low risk. I hope to persuade you to start investing soon and take control of your financial future.